All right, welcome to the episode and the podcast, folks. We're excited to have Morad Askar here with us. Thank you for joining us all the way from
Chicago,
home of the futures and the commodity folk. So thanks for joining us today. We have some great things to talk about, and we're very anxious to hear from you and kind of your journey and where you've come from and the things you've picked up along the way. For everybody that's maybe hearing you or seeing you for the first time, I want to give you a little bit of an introduction, and then I just want you to run with it because I think you've got a very interesting resume and journey that has kind of brought you here to where you are. So we're anxious to hear all about that. But I want to let everyone know that they can find you at Futures Traders 71 on X, as well as other socials, right? And we will include those in the show notes down below, and we'll give you a chance to kind of talk a little bit more at the end about where everybody can find you and kind of follow your journey there. You've been trading for over 2 decades.
Yeah, I started in 2000, 25 years, just like you.
25 years. Boy, the time flies.
It goes by fast, yeah.
It cruises through. But you've had quite a journey. High frequency trading in the NASDAQ in the early 2000s, that was quite an undertaking, and I definitely want to hear more about that. You've pioneered volume profiling, which is a huge deal, and order flow analysis. In the early 2000s, those were very tricky things to do, and to be kind of at the forefront of that is very impressive. So we're excited to hear about that. You've also founded EdgeClear, Convergent Trading, and Aerofin. What do you do in your spare time? I mean, this is...
Try to raise my younger 2 kids, 7 and almost 4. So it's definitely, heck, I'm exhausted just hearing you say all that.
I'm not even done yet. I mean, this is what I'm saying. You're a busy guy. On top of all this, you've helped thousands of traders and professionals through the process. So being in the market for 25 years, doing all these things, I think you and I have had fairly similar journeys. And not to one up anything here, but I have a 2-year-old. So the sleep levels are low. But you said you have what'd you say, 7 and 4?
I have 7 and 4, and I have 2 older kids too, 22 and 20. Oh, so man. I kind of decided to remarry and do it all over again in my more senior years. But they're a delight, and things are just moving very fast. To be honest with you, right now there's just a lot going on, not only for me but in our space. You know, we're getting a lot of movement in the futures space. You probably heard Kraken bought NinjaTrader. A lot of mergers and acquisitions. DraftKings announced today that it bought the predictions exchange. I think it's called Rail something. The predictions folks, you know, the sports betting folks are coming into futures under the prediction.
Isn't that interesting?
Yeah, so there's just a ton going on, and we're just trying to keep up all the time. So they bought Railbird. That's the exchange. It's a sports betting. So now DraftKings is DraftKings Predictions. So there's a lot of that. Chicago's the place to be when it comes to, you know, futures, commodities, a lot of options. Absolutely. And I feel like I'm at the epicenter of it.
Oh man, you absolutely are. And I love that you bring up the predictions market and the futures market. I would love to hear your thoughts on, I mean, this predictions market has really gone wild the last few years, right? Polymarket's a big one out there. I think they just got a $2 billion investment from one of the big exchanges. Was it NYSE?
ICE. They just came into ICE. Yeah. So that's how they're coming into this. The player that changed the game in this space is a company called Kalshi. out of New York. Now that's Tariq Mansour is an interesting guy for you to interview, to be honest with you. He basically took on the gaming boards, he took on the CFTC, and he won quite a few fights to change how the prediction markets work. And so on Kalshi, you can trade or take positions into everything from elections to Taylor Swift to sports to whatever, and it kind of opens the door for all these formerly state board-based betting companies like DraftKings and FanDuel and all these guys, and kind of opens up a different world for them in the form of coming into the future space and being under CFTC, which is more of a federal jurisdiction. So this is why there's just a lot of movement there.
How are my futures guys feeling about this? I mean, this is very interesting because, we have this FanDuel and some of these other ones were just kind of just betting sites, right? Bet on your team, do your thing. And they've come into this, essentially this regulated kind of futures market. And I'm curious, kind of, is there, okay, let me back it up a little bit here. If we're trading futures, if we're trading any kind of economic market, right? We're trading stocks, futures, anything, we're going to have our signals and we're going to have all of our indicators and reasons that we take trades and so on. And now we have this kind of just flip a coin kind of, it's betting, but it's prediction now. And we're starting to see this popping up. One of my accounts, I have an account with Interactive Brokers, and they're one of the things that they've added is this prediction market as well. Who's going to win the election and for New York City mayor and all this. And so I haven't dove into it too much, but our futures guys, I mean, what's the take? Are you guys jumping into this and grabbing onto it, or is there some resistance?
Depends who you ask. In my opinion, I came into futures. I came into equity trading in 2000 and became part of this group called the SOS Bandits down in Florida. And we were kind of, we were using the NASDAQ small order entry system to front run level 2 orders, institutional orders and so on. If you could do it right, you could pretty much print money. And a lot of the guys in the office were. I mean, you come into the office in Vero Beach and there's just Ferraris and Porsches outside. It's the classic, almost like the image of the movie Boiler Room. But when I came to futures after 9/11 and the equity side changed through changes in the market structure, the liquidity providers versus liquidity, makers versus takers, and all these fees, and it just made it a lot more difficult. Futures came in. I drove up from Florida and secured myself a spot in the prop shop, and the idea was this was an electronic trading shop. I drove to the Board of Trade. I showed up and I begged and pleaded for a spot in this kind of new prop trading firm called Matrix Trading. And they had just gotten a bunch of money, like $4.5 million, and they were ramping up with these traders, and I wanted to be one of them. And I remember going down to the pit when I would hit my daily loss limit, which was pretty much every day. And I would go down to the pit and watch these guys trade, right? In the Board of Trade, there was a kind of a visitor center, a mezzanine level where there's glass, and you could look down at the ag pits, or you can look down at the financial pits, which were much bigger. This is where you will see the treasuries and so on. And if you walk 4 blocks up the street, you could go to the CME building and you could watch S&P and you could watch all these other products, Eurodollars and so on. Just massive. And I'm looking at these guys and they are just screaming and they've got their hands up in the air. And then there are these guys with like little tablets and they're just kind of wearing their trading jacket and they're kind of sitting in the corner in their little tablet. And the guys who are screaming and moving the pit, would look at that and say, God, look at that guy. He's trading on a little tablet. Look at these guys on the computers on the perimeter of the pit. And where are those guys in the pit now? And to me, the prediction markets, I guess this is a big roundabout way of saying this is just the next evolution.
Yeah.
And so this is the next space. Now, you go to a purist, a futures purist, and I love, once I started trading futures, I never looked back at equities. You look at a futures purist, and they'll tell you, hey, we don't have SIPC. We don't have all these protections. Why? Because it's a highly regulated, centrally matched market. It's pure. And there's a chain of custody that protects the customer. Unless there is fraud, which is allegedly the case for PFG, a customer has not really lost money in their futures account. They've always been covered. Even in the MF Global debacle, people got their money back. If they didn't sell their interest in their account, they got their money back. So futures people are very, very purist about it. So now you go from, hey, this is a market, this is regulated and so on. Oh my God, all these gamblers are coming in. What is this prediction stuff? Why you can only trade it on an app? How could you trade a contract on an app, you know? But the fact is, these are well-defined in their core. They are well-defined long option positions with a predefined max value, predefined max loss, and they're actually good products for many people. Now, I've been exposed to the retail space since about 2008. You know, I ran a prop shop. I had a lot of traders. I backed quite a few traders. It was very successful. We're basically market makers on Eurex products, the Dow, the 10 years. And we were a very, very busy group. And I noticed that traders kept asking me for higher limits, but my returns on those accounts per month were not increasing by the amount I was increasing the risk. And so to me, it just looked like, hey, the writing's on the wall. This is dying. You cannot operate at that level. So I started to go out and find out, what are other people doing to trade? Because even though I ran a prop shop inside of a clearing firm, I was one of that clearing firm's first customers, Advantage Futures. And I couldn't walk next door to M&M Trading and say, hey, how are you guys making money? Tell me. So I had to go online and kind of discover it for myself. And I got exposed to what is out online for anybody that comes into futures and wants to learn. And it's very, very tough to come from another discipline. And even for someone who's normally trading an option wheel or something like that, trying to come into futures, it's a very difficult transition.
Yeah.
So in my process, I started to have conversations online, and I started to do these tiny chats. I'd spin up a webinar and say, hey, if anybody wants to join, let's talk futures. And very quickly, I got a very accelerated following on Twitter and started getting invited at various venues to talk and so on about futures. And what I discovered is it's very hard to trade. It's very hard for someone to understand why price goes up and why price goes down and so on. And most of the time, back to the prediction market question, most of the time, what you find is, you know, people will listen to me in my trader bite in the morning that I do at, like, now it used to be 8 a.m. Central, 9 a.m. Eastern. Now it's 7:45 Central, 8:45 Eastern. I go through, here's what the market is. This is what the macro picture is. Here's the news. These are the themes. And I'm expecting the market to do this, this, or this. I'm just going to wait. And then once the setup shows up, that's the trade I take. This is what I share every day. This is how I've been trading for the last, I don't know, 18 years out of the 25 or something. And so I share it. Even though everybody understands what I'm talking about and they've listened to the webinars and they get it, they're not able to make money. Why? They're not able to make money because you've got to get 5 components right on any given trade. in order to make money. You have to time it. Your entry has to be good. Your stop has to be right sized. You have to have targets, or at least partial targets, to take something out of the market to cover your risk or whatever to fund the trade. And you have to have the direction right. You get any one of those 5 wrong, and you have a loser, right? And so you have a small chance within a trade. And so what happens now with prediction markets? Again, back to the prediction markets. I don't have to worry about all that stuff. If I take an event contract on CME, for example, and my event contract says I'm going to take a prediction on the NASDAQ closing above or below 25,000 in the futures right now. It's currently trading live at 24,930. I could be wrong all day, and at the end of the day, it crosses that line. I risk $5 and I get $95, right? And I don't care where my stop is and my scales. And people have a better opportunity, in my opinion, because you and I have traded long enough to know that we can have an opinion on a symbol or a product or a commodity or whatever, and still be proven wrong and wrong and wrong again until we give up, and then there it is. With a prediction market, it's a call option or a put option. I don't have to be intra trade. There is no stop. I have to exit the position, and I could still have an opinion on the market that is correct. But to do that in futures is tougher with the leverage. I mean, this is why we always have this disclaimer, derivatives trading is not suitable for all investors because it's leveraged. But with predictions, there's no leverage. It's here's how much I invested and here's how much I expect to get return.
So do you think that I actually wrote a post about this on LinkedIn a little bit ago, and I said we're going into a world where we're kind of, I'm an options trader. I trade equities, and that's kind of the result of many of my option trades, right? I am taking shares from an options position, or giving shares back, or whatever. And I love what you say about the fact that it takes so many of those variables out. And it's kind of interesting. We're seeing this big trend in society where, this post that I was talking about, I said, everyone's going from a bicycle to an e-bike, right? They're going from tennis to pickleball. We're going from writing something to AI writes it for us. And I think this is kind of a natural evolution, as you're talking about, right? We can sit and fight and say, the futures purists can say this prediction market is garbage, when it's maybe using the technology that we now have and the knowledge that we now have to simplify a process that still can have winners and losers and still have potential for profit. And so on that front, do you see this prediction market? Is it on the trajectory to catch up to futures, overtake futures, kind of traditional futures trading?
I think it serves different purposes. I think if I was to remain a futures purist, I would be one of these guys thinking, how in the heck are you going to get filled without waving your hands in the air? And somebody says sold, and then I might have an out trade because they said 5, I heard 50, and now it's just done. It's matched and it's done electronically. The prediction market just gives us a much wider spectrum to now have an opinion on. I can do that by going, hey, Jared, what do you think of this game? Bet. I don't need to do that with you. I don't need to get you to pay out. I just go and put it out there. I can bet on the spread. I can bet on all types of things. But predictions, I think what the effect is likely to be is I'm a probabilistic trader. I'm an auction market order flow, but my main thing is probabilities. I focus a lot on historical probabilities, and that's why I love futures, because it's just one market, one matching engine, and the statistics that I have on this market are the same that everybody has. And I can build a character around the NASDAQ. I can tell you things about the NASDAQ that have a 98% historical probability of happening every day. And so that's what I trade. The prediction markets are going to bring us closer to that, in that I can look today and I can go on Polymarket or Kalshi, and I can see what is the smartest people in the room, what is their current prediction for the House of Representatives flipping Democrat. It's like 76% or something. And that's the purpose it serves. It's another thing that takes away more of the unknown and quantifies things for us, just like computers have for a long time. Now, I remember the day, you're probably too young for this, but you're driving next to your dad in a Chevy, and the gauge for the gas has been stuck on empty for the last 5 years, and your dad kind of knows by shaking the car how much is in there, and they hear it sloshing around. That's futures. Prediction markets, I can tell you how many miles you have left. I can tell you how many gallons you're burning right now. And there's a system that can help you reduce your consumption and so on and so forth. It's just the next evolution, like you said. It's exactly on point what you said.
Interesting.
But for me, as somebody who owns EdgeClear, an introducing brokerage, an online introducing brokerage, for us, it has the potential of bringing a whole new set of customers, right? It brings many, many more people who would otherwise be localized to FanDuel or DraftKings or BetMGM or whatever, brings them to a more regulated, more controlled space, in my opinion. So net, it's a positive for us.
So let's talk about strategy. If we're talking about something like this. Now, for example, you and I both, 25 years experience in the markets, we're going to have our reasons we believe that the NASDAQ may end above or below a certain level, or have a better probability than somebody that has no experience there. What do you think in kind of these prediction markets, if somebody's betting on, for example, will the majority flip one direction or another in the government? The things that we see, right? Will so-and-so get elected? Will Taylor Swift say the name of Travis Kelce in her next song 12 times? So there's this kind of, there's these two areas of just pure guessing versus we see a historical trend. There's fair reason to believe that something's going to end above a certain level. Even if you go to the election side of things, there's plenty of shocks in elections, but there's shocks in the market. So where are we crossing over from pure guessing to there's a strategy behind it? Is there a strategy behind betting on Taylor Swift doing something versus betting on, what the next election is going to look like?
Not for me, but for someone else, maybe. I could take a position, and people did on the last election, going to Trump. And I remember reading about one guy who got paid, I think on Poly or somewhere, maybe Kelshi, got paid like $21 million, some French guy. Yeah. It has an element of journalism. It has an element of research. You can predict some of these things or take a strong position on some of these things. Is CapEx on AI going to be less in 2026 versus 2025? Well, if I'm someone who's in that space and I'm tracking what these companies' earnings are saying and doing, and I'm watching for the returns and what's happening with AI, I might have a pretty darn good position, but I can't do anything with it. It's great information. I'd love to capitalize on it and monetize it. I can't go anywhere. But you know what? Now I can go take 1,000 contracts position in that space and actually make money on the research that I've done. Hey, I'm a Swiftie and da da da, and I know this and I know that, and my girlfriend's cousin's sister's boyfriend said that Taylor Swift is going to do this. Okay, great. Well, now I can actually monetize that, and that's what it is. It's dollars, right? So I'm going to stick more with the financial side of things. I don't even follow sports, so I'm no good in that space either. But to me, the financial side makes sense. If I feel like, hey, this is a little too heavy for me to go into the NQ contract and take a position on this, I'll just do it in the prediction markets. And I know that I'm going to lose $1,000, and I know if I'm right, I might make $6,000. And so I have a venue for that without going into making sure my broker turns on my options on futures and signing the additional disclosures and then taking an option and dealing with theta and dealing with all this stuff, right? I can just take a very straight up, buy, sell on an app type of thing. Just taking what could be a complex thing, which, as you said, coming into futures was like changing brokers, was just like passing a master's degree. We're making it much, much easier. People are betting and trying to predict and are researching already. This is just giving them a venue of doing that. By the way, we're not supposed to mention the word betting when it comes to this stuff, but
it's the taboo word, of course. And
yeah,
it was kind of like the 10 years ago or so, people would say it's not gambling, right? Trading the markets is not gambling. They're both very different. I'd always say there's
if you don't have an edge, if you don't have an edge in risk control, you're gambling. But if you have an edge that you've defined, setups, a trading strategy, good risk control, good R factor, you're getting paid pretty well for the unit of risk. It's not gambling. It's a professional thing. I mean, otherwise, every entrepreneur that's ever started a business is a gambler too.
First, I mean, essentially, right? We all take risk, and risk is associated with all of that in everything that we do, right? Driving your car down the road is a gamble. It's a risk. And so it's interesting that the edge that we have and the edge that can be developed, and it's going to be really interesting to see in these prediction markets. I mean, again, I'm all in on the derivatives and equity side of things. And, I think I don't work too much in the retail space, but I think that certainly in futures, certainly in options, there's such a complex, as you've said, set of parameters that somebody needs to become familiar with. And to just say, for example, if I'm looking, at a chart of NVIDIA and I say NVIDIA is just, the AI craze is only getting started, right? And I'm just gonna, instead of having to try to figure out what's the best delta to buy on this option, or I'm going to tie up a bunch of money buying a bunch of shares, I can just say in 6 months, NVIDIA will be above X price, right? And it simplifies it. It brings it into the realm of a lot of people that want to participate in the market. And we've kind of, I've talked about this a little bit in kind of past episodes where I think we're seeing this shift of the retail traders were always the dumb money, right? And the dumb money's throwing it at this, and they're buying at the highs and so on. And the hedge funds are the smart money, right? The institutions know what's going on. And we kind of saw a big paradigm shift really kind of in the meme stock era, right? 2021, where these hedge funds were getting just steamrolled by the retail trader. And I mean, have you looked at Beyond Meat, right? Up 1,400% in the last 3 days. How many hedge funds were short Beyond Meat and holding shorts? I haven't even looked into it. I just look at this chart and think, here we go again, and so it's interesting. you see, and it's interesting we've gotten on this kind of prediction market kick because I think there's so many interesting things there, but do you see a time when hedge funds really go big? Institutions? I mean, because we're seeing exchanges, right? ICE has invested $2 billion into Polymarket, and this is kind of starting to happen everywhere. And I think they're seeing the writing on the wall. Will hedge funds get to a space where they're more on the prediction market side and less on the traditional market side?
I think you ask anyone in that space, they'll say no way, but you don't have a choice. Not only ICE, but CME has a partnership with FanDuel, now DraftKings with Railbird. We'll probably hear about Eurex doing that, although Eurex is much more traditional. It's you either are in the race or you're left behind. Now we look at the hedge fund space. Now this is a space I know tangentially because I have an investment manager and I know how that works. But something like I'm a hedge fund and I buy stocks, and we are a value fund or a momentum fund or whatever, and we trade stocks. Then it changes into, well, we do stocks, but we also have this thing called ETFs. We do stocks, ETFs, and then there are RMBSs. And then there's this other paper, and there are these packaged things that we can invest in. Like, that nasty paper that was being bought and sold 2002 through 2007 that caused the big correction in the housing market. How does the hedge fund and pension fund space explain that? Like, you're buying these things that are being put together by these investment firms, and you're going on the idea that there's a 6 sigma probability that this will be worth nothing, but for now you can get paid pretty well, and then the 6 sigma hits. And so to me, it's like, let's not go too crazy with the hey, yeah, this is unusual, because I could tell you, even in the hedge fund space, there's just stuff that's very, very unusual there already. I just think it'll be very hard to, as these contracts are small, you can trade a prediction market contract for 1 or 2 cents in fees. And I think these contracts will get bigger and bigger, and they'll become a big piece of the financial landscape. And why shouldn't they? I mean, there are hedgers and speculators in futures. Hedgers are producers, consumers who are going into futures to secure risk or to secure supply. But a huge portion of the market is speculators. What are you speculating on, and why shouldn't that be a prediction market, swifty, speculation versus nat gas is oversold and I don't think it's going to go lower, so I'm just going to buy nat gas today. You're just replacing the commodity with something different, but it's all the same.
It's interesting to see how the complexities have been driven down, right? I mean, again, like we talked about, if you switched brokers 20 years ago, good luck. YouTube was 5 minutes old at the time, and there weren't educational videos on there, and nobody had support on anything, and you just had to be like, okay, let's figure this out. And you're right with the complex, financial derivatives that were created in the early 2000s that ultimately ended up exploding and getting down to this point where everything is simplifying. And I think that's really the idea behind technology and progress, right? Is the complex becomes understandable, maybe. And it kind of, this is tricky for the big financial institutions that depend on people saying, I don't want to mess with this. It's out of my, it's above my pay grade, so to speak, right? This is complex. I don't want to learn how to trade options. I don't want to learn how to trade futures. And to this point now where it's like, are there decent probabilities of something? Anybody can do this. And it's going to be interesting to watch kind of the consolidation of the industry, right? And these financial institutions will have to jump on this bandwagon, as you're saying, because they're going to work themselves out of a job if they're not careful, right? So
True. Absolutely. And the additional piece here is that where's the growth in the financial markets? The growth is in retail. So how do I know that? Okay. Used to be that, I advocated for the micro contracts and futures in 2002. The exchange said no, not interested. And why did I do that? Because I had a big following on Twitter. I was doing these videos talking about the ES, which at the time had a notional value of about $95,000 per contract. People were trading it for $500 a contract. It was too big. So people were following me, listening to me, looking at my charts, looking at what I was saying, and they were going to their broker dealer and trading SPY. And so I went to the exchange and I'm like, we're not getting that business because it's just too big. Let's cut it at least to a fifth or a tenth, preferably. And they said, no, that's going to cannibalize our, big products. And then in 2019, they released the micros, and that was the biggest product launch in CME's history. And this is the biggest exchange in the world. And now there's so much focus on retail. You have Robinhood retail. Remember, if I referred you to a Robinhood account, I get a share of some random stock, you get a share of a random stock. You think that was something you would sell to a bank or an institution? No, that's retail. Robinhood made it easy to open, fund, and start trading an account. You could do it in a half hour. Crypto came and just absolutely kind of pushed through and made it even easier. Webull, same thing. Then eventually what happened is Robinhood moved into the futures space. They have a huge presence in equities and equity options. That's where the whole Wall Street bets thing came from, is the way Robinhood handled those options positions and how those funds were losing 10 or whatever $billion, and they had to stop people.
The sell button disappeared.
Yeah. And so, but then they move into futures, and it just tells you where the money's chasing the customer, and the money's chasing the retail independent customer. It's not really institutional. And if that's the case, then you're going to need to simplify things, make it easy, make it quick. And that's exactly what's happening. You look at a prediction platform, these prediction markets actually have a bid and an offer, and they have a market depth, and they have market makers. But every platform just has a buy and a sell button. You want to look at the order book, you can, but who looks at order books? And so that's the difference. This is why things are becoming simplified.
Yeah, it's certainly the trend. It is certainly the trend of everything. And it's going to be very interesting to see how it shakes out, to see how some of the bigger financial institutions either adopt or whatever they're going to try to do with it. But I think adoption is kind of the only way forward. Yeah. The only option here. That's super interesting. Now, let's talk about the current markets for a second. As a futures trader, still, we're seeing the metals going nuts. We're seeing some of these commodities going crazy. Have you been involved in this gold move? What are your thoughts?
Gold and I have a very turbulent relationship because as soon as I think I'm seeing something that is just a high probability, I get in there and I just absolutely get slapped around. It runs, then it turns, then it runs the other way. I mean, yesterday it was off by almost 9%. I mean, it dropped almost $400 from almost 4,400 down in the futures. How many people tried to buy the dip on that one? It's recovering a little bit today, but not that much. What scares me about gold is what it says about the dollar. Gold is dollar denominated. That's the other side of gold. And it's like, that's how much less value the dollar is. And it's been kind of really concerning me to the point that I'm, moving into investments or savings. I'm moving into positions in other currencies just because I don't know what's coming. But gold has basically run like crazy, and all it did yesterday is come back to its monthly VWAP. It did not really crush anything or whatever. And I expect, given how it's traded, I expect gold to just take a breather here. I expect it to go into this kind of sideways contraction for a little bit, unless this move was driven by some sort of change, India's dumping gold or China's dumping gold or something. I don't think that's the case. There's a lot of unknown. There's a lot of money sloshing around in the system, but there's so much in terms of unknowns. And these tariff discussions, the news that we got today out of Trump and Truth Social about China and possibly stopping software from being exported to China. The NASDAQ responded very aggressively to that, and we're still kind of licking our wounds from that a little bit. The metals have been a tough trade, I think, unless you're a momentum fund or something. It's not been easy.
It's always interesting when the people that just bought gold, for example, maybe a year ago or 10 years ago and forgot they owned it, and they're just killing it in the background and not even maybe recognizing it hardly. Those are always tricky moments. But it's interesting that you bring up, when we look at like the dollar gold correlation, right? And we see that the dollar is I mean, it's down. When we look at the long-term dollar trend, I feel myself torn between just turning on my technical analysis brain and silencing the narrative side of things. And I think, will technicals play out here on the dollar? What do you think? I mean, the dollar has certainly been lower many times over the last couple of decades than it is right now. But is this the beginning of something much bigger? Is this a recovery place for the dollar to gain some momentum? What do we see? What do you think?
I like you, I'm not really a kind of purist on the narrative itself, but I'll tell you what's alarming. Go look at the S&P. Go look at the S&P 500 in gold terms. That tells you quite a story. When you look at the dollar and it's like, the dollar basket's trading somewhere between 90 and 100 and something, and now it's sitting right in the middle of it at 100, or 98, 90, and it's like, oh, the dollar's not going anywhere. But if I took the fiat currencies, all of them, and I replaced them, we went back to the days where like I had to bite a coin and make sure it's legit before I handed you your pig for dinner or whatever, your chickens. In gold terms and in commodity terms in general, it's not doing so great. So a really interesting chart, if you can get your platform to show it, is to look at equities in terms of gold. Had I held gold against these equities, how would I have performed? Another one that is not a commodity but is interesting is Ethereum. Right? Ethereum went from 1,300, 1,600, something like that, to like 4,600 in a matter of like 4 months. I mean, the whole move in the crypto major coin space says something about people clamoring for something other than, fiat currency. I'm not a macro guy. Macro is extremely interesting to me. I have a minor in economics. It's like addictive to listen to that stuff, but I don't know what this all means. But the fact is, the deficit's out of control. We had Doge, which was supposed to cut the deficit down, and all it did is like put a tiny dent. But then, our budget reports from the government, once it's not in a shutdown anymore, we keep exceeding what the last administration did, and we will continue to. We'll continue to spend more. It's a runaway train, and there's going to be you'd expect there to be a reckoning of some sort. And I feel like gold expresses that. The dollar basket does not, because the dollar basket's being compared to other currencies that are doing the same thing. They're debasing their currency. But give it to me in terms of real estate. Give it to me in terms of gold, silver, platinum, palladium. That's a different story. you know.
It's interesting to bring the metals into it, because it does kind of put a little bit of a very traditional, it speaks to market confidence, right? Gold. I mean, if you ever listen to, the real traditional traders, I mean, Warren Buffett, right? He says gold doesn't produce anything. It's gold, right? They have no earnings, they have no growth. It's just gold, right? And obviously Bitcoin and some of these other things are just these things, but we've seen in this uncertainty gold go crazy. We've seen Bitcoin go crazy, right? And into these all-time highs, or Bitcoin sitting around all-time highs. And it's interesting because it does say a lot about the confidence. And I'm always kind of interested, if there is a shock in confidence, will there be a flood to U.S. markets, as there has traditionally been? People start buying bonds and they say, oh, things are crazy, but the U.S. government's never defaulted on anything. Maybe we'll just buy some of that. Or do we go for gold and say that's more international, that's more independent of anything, or Bitcoin? And I think it'll be very telling in that whole space. If there is, and obviously there always is at some point, some big market shock. And on that, we'll kind of wrap it up with this, but do you see, if you had to bet on this, if you had to make a prediction and put some money on it, if you could quantify what kind of correction you think is coming, small, medium, large? I mean, we have, Andrew Ross Sorkin out there saying, this isn't the .com parallel, this is 1929 parallel. And I have a sneaking suspicion that he's saying that because that shocks people and that'll get people to buy his book. But what's your take?
I mean, the perma bears have gotten crushed again and again and again. They were right in 2008, 2009. They were right in 2000, but we go, 8-10 years of wrong for a year or two of right for the perma bears. It's hard for me to say. I feel like, I believe from what I'm seeing, I believe that there's money that's continuing to be created, and that money makes its way into people's 401ks and so on. I believe that as much as we want to be an isolationist country or whatever, it's a global market. Why is Bezos as rich as he is because 30 or 40 years ago, Bezos's market might have been his state or maybe the country. Now Bezos's market is the entire planet. So all this money is being pulled from everywhere and going into Amazon. So it's tough. I think under those conditions, it's really tough to say, oh, there's going to be a shock just like there was in 1929. Those guys are wrong so often. I'm not sure how they have the courage to come out and say the same thing over and over, but I wouldn't. I would just be like, I'll just wait for it to happen and then talk about it. But overall, I don't know. I think we're due for something. I mean, we're pushing, the S&P basically pushed near the news high from 2 Fridays ago when this whole thing with China started again. We're looking at a government shutdown that's 3 weeks old. We're looking at a November 1st deadline for 155% tariffs against China. But these are just news blips. Overall, I think the more concerning thing is just a general destabilization of governments. I think that's where people need to kind of keep an eye. And as long as that continues, the smart money is going to go chase things that you can actually hold in your hand. As much as gold doesn't pay a dividend, like Warren Buffett says, but your stocks are worth nothing if the stock market has been bombed out of existence. I'm not predicting that. I'm just saying, like, if things get really bad, it's not what's on paper that's going to matter. It's what you have in your safe. I don't know. I don't believe in any of that. I think the market's too diversified for that sort of thing. So I don't believe that there's going to be a massive a massive correction or anything like that. I think it's more of a grind, in my opinion.
Time will tell.
Yeah.
Time will tell. I think those are some super great points, and I definitely appreciate you being on with us today. This has been a super interesting discussion. So thanks for sharing your insights and your experience and your thoughts on the matter. Tell everybody where they can find you and how they can continue to follow the journey.
You can find me on X or Twitter. The handle is FuturesTrader71. You can always look me up on LinkedIn, Morad, Moradaskar. Happy to answer questions, happy to talk markets. I'm obsessed. I've been obsessed for the last 25 years with how the market trades. Always happy to hear from you. So, just reach out.
Thanks so much, Morad. We will hopefully get you back on again in the future. This has been super great. Much appreciated.
Thanks for having me on.
Thank you.